I'm Lauren Taylor, Managing Director of Active Property Group. In today's video, I'll be answering the frequently asked question, how often are distributions paid? The frequency of distribution for mortgage funds varies depending on the specific fund and its investment strategy. At Active Property Group, distributions for our pooled mortgage fund are paid on a quarterly basis. For those who select direct mortgage investments, returns are distributed at the end of the loan term. So why not monthly? A number of other pooled funds offer distributions on a monthly basis. It is something that we have considered offering also. However, the administration required to finalise returns and distribute reports and statements would mean a 3-time increase in workload and therefore an increase in the fees charged by the fund. We want to keep overheads as low as possible so returns can be as high as possible. So how are returns calculated? As the name suggests, a pooled mortgage fund pools money from investors, and this money is then lent out to borrowers. In the case of APG's Pooled Mortgage Fund, the money is lent exclusively to borrowers with genuine business purposes, such as SME owners and property developers. APG's portfolio usually consists of around 30 different loans at any given time. This means that investors' funds are instantly diversified across multiple loans. The interest paid by the borrowers within the portfolio is then distributed to investors. The amount of interest earned will vary depending on the interest rates charged to the borrowers within the portfolio during a given quarter. The interest rate charged to borrowers depends on many factors, including the risk of the loan. The higher the risk, the more the borrower will be charged, and therefore the higher the return that is passed on to investors. Our interest rates go up and down based on the cash rate set by the RBA. However, our borrowers are on fixed rates for the initial term of their loan, which is usually 6 to 12 months. So there is generally a delay between the RBA interest rate increase or decrease and this being passed on to the borrowers. All new borrowers will be charged the current interest rate though. So what about direct investments? If an investor chooses to invest in our direct mortgage fund, they will be invested in one specific loan rather than a portfolio of loans like in the pooled mortgage fund. One of the main differences of investing this way is that you don't receive regular distributions. Instead, you receive your capital and return at the end of the loan term, which again is usually between 6 to 12 months. Another question we often get asked is, can I reinvest my distributions? You absolutely can. We operate a distribution reinvestment plan, or DRP, which allows investors to compound their interest by reinvesting their distributions and increasing their invested amount. You can choose to reinvest the whole distribution or select to reinvest a percentage of the distribution and have the rest paid out. Lastly, people often ask how they can access information about their investments. Each quarter when distributions are paid, you will receive your distribution statement showing the distribution you've received for the quarter. You'll also receive a quarterly report which provides more information about the loans currently in the portfolio and an outlook for the fund. These documents will also be saved in your online investor portal where you can access information about your investments at any time. Before I go, I just need to say that this information is of general nature and does not constitute professional advice. You should always seek professional advice in relation to your particular circumstances. The returns mentioned are not guaranteed. You risk losing some or all of your investment. If you have any questions about investing in mortgage funds, then please get in touch at investorrelations@activepropertygroup.com.au. Thanks for watching and see you next time.